Okay. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I'll be presenting the Asian Session Live Market Analysis and the forecast for today, 18th of March, between 5 and 5:30 GMT. Since I underwent a surgery, I was not in a position to present the webinars during the later part of February and also the early part of March. I'm sorry for the same. So I'm back with a full energy. So I will try to give the Mondays and Fridays webinars for the benefit of the traders. So in this webinar, I normally give the session-wise forecast and the levels in which the currencies are expected to swing in this week. And also I will try to give the market reading using the initial lows and the highs so that we'll be able to understand in which way they are expected to take the market. And also I give the long-term forecast for the benefit of those who want to do the position trade. And I have been telling you that the players are accumulating buy positions by making the dip during the early part of the year in the month of January and also February. And then subsequently, they wanted to show their true color, why they made the drop. And now you can understand why they made the drop. It is mainly to accumulate, create the bearish feel and induce all the technical analysts to give the bearish call so that the traders have got no other option than to do sell and buy trade. After liquidating all the long positions they have been holding for a long time patiently, then after that, the players have accumulated all the buy positions, started gaining the levels. So the traders have got no other choice than to go for sell and buy trade. But that becomes an erroneous decision. It doesn't mean that when the buy and sell trade opportunity is not visible, we can straight away go for the sell and buy trade. And invariably what happens, the players use every excuse in the market, like the FOMC, the BOE or ECB or whatever it is, and irrespective of the outcome of the data or the speech or the event, they try to give a different interpretation and try to gain the levels in the case of Euro, GBP and US Australian dollar. Besides, they also gain the levels alternatively in the case of the denominator currencies also like USD CHF, USD yen and USD CAD. So this is what we need to understand. I've been telling all along that they intend to do this, and then now it becomes visible. So what is going to be the next step from here? So after the lower level consolidation with a frequent downward stop, and they have just gained the level to that of the middle level. So from that of the middle level, they will gain up to that of the higher level and then make one extended downward stop and then start gaining the levels to that of the highest level in the coming months. Then afterwards, they will try to do the higher level consolidation with a frequent upward stop and before the US elections. So till such time, they are expected to continuously gain the levels. So if you use the hedge order instead of stop to limit the risk, buy and sell trade, then you can book profit whenever it is hedged. And when they make an extended downward move, book profit in the hedge and keep another hedge order. Then once they start gaining the levels, you find that your buy position is in the money. Then try to maximize the profit using the trailing stop. So this way you can continue to do during the trending time. So follow the derived forecast. Besides, use the market reading technique of noting down the initial lows and the highs around 3:30 GMT on a daily basis in all the 4 majors and 2 commodity pairs, and try to find in which way they are expected to make the moves session-wise. And also, I have given the session-wise forecast and you can follow the session-wise forecast. Today being 18th, it will be swing and rise during that of the Japanese session, and then they will make one more rise during that of the early part of the US European session and firm up. Then afterwards, they will make a small dip during that of the start of the US session for those who are holding long position to liquidate. Then afterwards, their players buy those liquidated buy positions, sell positions, and then continue to rise for weekend for the short covering. So they will alternatively try to trap the traders. They go for either way trades. So they will try to induce the long liquidation to start with, and then the short covering. This is what happens normally when they are rising the market on the upside. When they are rising the market on the upside, they do not want anybody to book profit easily after the full rise. Instead, they just give the fear to the long holders by making a dip either during the late European or early European US session, so that the traders will liquidate in a hurry, thinking that it might drop following the data or whatever it is. Then subsequently, they start gaining the levels against the expectations of the traders. Those who are liquidated the long positions after being influenced by the data, they try to take the sell position. Then what happens when they continue to gain the levels, the players continue to gain the levels for weekend, they go for the short covering. So even though they are done wisely, the buy and sell trade, initially to book a small profit out of fear, they quickly close the buy position and turn seller, and later on find that they have to do the short covering and lose whatever they earned. So this is what happens to that of the scalpers and also the swing traders, either way swing traders. So if you try to think of doing either way swing trading, then you have to wait for the appropriate time to do either way trades. Otherwise, in an upward trending market, wait for the drops to happen and then try to take the buy position. And you know very well the quick moves are false moves in the market. During such quick drops, you try to take the buy position and keep the hedge order to limit the risk in case if they extend that move on the downside and book profit in the hedge order, hedge position, and then keep another hedge order to limit the risk, then they will start gaining the levels. Then trail the hedge order until you are able to keep stop at entry, and then maximize the profit in using trailing stop in profit making position. So they are expected to continue to rise the levels and go in even this today and also coming week after the week beginning fall move on Monday, and then they are expected to continue to gain more levels for that of the weekend and sorry the month end. So keep in mind that they are expected to make aggressive moves. Should be 21st. So don't think at this time that when they are gaining the levels, it is a false move, because they are trying to bring in shift in trading zone, the upward shift in trading zone. After that of the lower level consolidation with a frequent downward stop, and they are trying to take the market by today to that of the middle level. The already whatever the levels they have shown, above that they will try to close it for Friday. Then afterwards, next week, they will make the week beginning false move on Monday and try to induce the traders to go in for a sell and buy trade, thinking, giving the impression that technically Euro cannot go higher, GBP cannot go higher, and it looks heavy, and this sort of feeling they will try to create. And for that, the technical analyst will facilitate giving all the emotional expressions that saying that Euro looks very heavy and it is overbought conditions, so it will come down and things like that. But then subsequently, the players induce the traders to take sell position and continue to gain the levels and make the shift to that higher trading zone after brief either way big swings with either way stop loss during the middle level consolidation, they will try to take another 1,000 to 1,000 pips on the upside and then try to do the higher level consolidation with frequent upward stop loss. So keep all those things in mind and then trade wisely. Don't think that the market is going to be range bound all the time. Why they make the market range bound? So that the traders develop the feel to do either way trades. So when euro comes to 1.13, take a sell. Then when it comes to 1.10, take a buy. So the traders become habituated of doing that. Then subsequently, they breach those levels and go further higher or further lower in order to trap such traders. So initially what the traders earn technically, they lose based on the shift in trading zone. That is why you find that the going was good. Suddenly the market has become crazy. I was not able to earn. This is what most of the traders say without understanding. It is a man-made market. Men manipulate the market, and we need to, it is not God who is manipulating, it is the men who manipulate the market because of the money power. So we need to read their intentions. As long as they are human, we can read their intentions, and you know very well that we are in a position to understand what the animals feel. So by becoming closely associated with the animals like pets or whatever it is, we can understand what they feel and what they intend to do and what are their requirements, etc. So why not we also read the intentions of the players? The players want to grab the money aggressively, and they wanted to earn and earn and earn without any full stop. So in that process, we need to see that we cannot fight against, and we can only trade along with them and try to make the money. So keep that in mind and then stop blaming the market. Instead, try to read the market carefully. Now coming to that other market reading technique. So euro formed the initial low. Here you come across the initial lows and the highs in the live market put page, and it was actually showing 1.1206 as the earlier lows, but today's low is 1.1307. And 1.1343 is the high. They are not breached the low or the high. So they will try to come closer to that of the low and then try to take it higher. Then in the case of GBP, 1.4468 was the initial low. They just breached and came down to 1.4455 and then started gaining the level slowly. Once they stop cutting the new low for more than 30 minutes, we can watch and take a buy position, and then they will start gaining the level from that of the late Japanese session. 1.4497 is the high, and that they are not breached it. And in the case of yen, you come across the USD weakening move. They had done it in all the currencies, but then subsequently they are expected to gain the levels in the case of denominator currencies. Whatever when Monday and Tuesday, when euro and GBP are making sideways move, they will try to gain the levels in the case of denominator currencies, and then later on gain the levels in the case of numerator currencies as well. So that we need to understand. They make such moves in order to handle the crosses and bring in volatility in the crosses. So you should not immediately think that they will be handling euro all the time. It is not like that. They may hold euro and gain the levels in the case of GBP, and afterwards hold the GBP and gain the levels in the case of euro. And that sort of alternative moves they will try to make it in order to handle euro GBP cross, euro CHF cross, like that, making a contrarian move, or euro yen GBP and etc. So you have to find out with the help of the live market code page what currency they are handling at a given time. That can be easily identified with the help of the contrarian move. So now you find that euro is showing negative net change, GBP USD yen is also showing negative net change, which is a contrarian move. Euro is making USD gaining move by 1 pip, whereas USD yen is making USD weakening move by 2 pips. So that is a contrarian move. Also in the case of GBP, they made about 17 pips downward move, when USDN is also making a downward move. In the case of CHF also, they made 10 pips downward move when Euro was making 0 pip net change. So when they are making negative net change, see now 1 pip negative net change in the case of Euro and 10 pips negative net change in the case of USD CHF, which is a contrarian move. This is mainly to make a dip in the case of Euro CHF. And also in the case of the commodity pairs, they are making the USD gaining move. That USD CAD is making 11 pips positive net change and Australian dollar is making 6 pips negative net change. So initially they are making small swings, and later on once they make the spread more than 40 pips between the initial lows and the highs and start making big moves in the market. So patiently wait for that and then try to take positions. Read the market using all the 6 pairs. Even though you might be trading only in the case of Euro, still observe all the other currencies and find out what they intend to do. When they are handling the crosses by making contrarian move, don't take position in the majors. Then your waiting time will be more in order to book profit. And when they are handling the majors, you try to either making USD weakening or USD gaining move. At that time, you take position, you will be able to really make quick profit. So if you want to cut short the time taken for you to book profit, then you have to identify what time you have to enter into that of the market simply by looking into that of the live market quote page, whether they are making the contrarian move or whether they are making the USD gaining or USD weakening move. Then in the case of yen, they come to 110.83 as the low, 111.47 is the high. It is not breached the low or the high. Slowly they are expected to gain the levels in the case of USD and also. Then in the case of CHF, 96.55 is the low and 96.78 is the high. They are not breached it. They are consolidating it and slowly they will gain the levels here. The denominators, later on the numerators will also gain the levels from the other European session. Then USD CAD 1.2969 is the low, which is not breached, and 1.3001 is also not breached. They are simply making consolidation here again. Then 76.33 is the low, 76.81 is the high. In the case of Australian dollar, there again, it is not being breached. So as a result, you come across only in the case of GBP, they just made the downward move in order to create the market sentiment. So they create the market sentiment, and once the traders commit positions, they act against the traders. Keep that in mind. So don't simply say trend is my friend, all those things. They are all mainly to divert the attentions of the traders or confuse the traders. Mainly keep in mind that the players are trading against after creating that of the market sentiment. So don't become victim of such act, the trap again and again. Say, you know that there are many muggers and there are very cheats in the world. So whenever you go to the public place like a railway station or whatever it is, people might come and say that they are willing to help you. They want to become friendly. Then you think that it is genuine friendship and trust them and try to see that later on such person deceives you. It can happen once or it can happen 2 times. If you get confused and if you get cheated again and again, that means you are not smart. You are vulnerable for such act. So try to see that you don't become scapegoat again and again. So let us identify the trades. I have given the trade calls here that in the case of Euro, we can keep a buy order, buy limit order 1.1305 closer to the low, and so that when they make a small dip during the start of the late session, we'll be able to get a fill and keep about 30 pips above the limit order. You can maximize it using a trailing stop after keeping stop at entry and keep 30 pips below the hedge order or a stop if the stop hedge facility is not available. In the case of GBP 44.68, I kept the buy order and now it becomes a position. So it has come below. You can take the current level buy, and then 44.38 I kept the hedge order to limit the risk, and 44.98 is the take profit level. So these are all the two trades I wanted to recommend. Denominator, avoid taking position today, because weekend they will focus on the majors mainly and try to bring in more of the USD weakening moves. So in that process, they will try to accumulate, quickly gain the levels in the case of euro and hold high and exit, lighten their profit and buy USDN and USD CHF, USD CAD when people are distressfully liquidating, thinking that it is the US dollar game is over. Then they will try to liquidate all the long position in the case of USD and USD CHF and CAD. The players will try to accumulate it. Then Monday they will try to gain the levels and book profit in them. So they have to continuously keep engaged in the market, keep invested in the market. It is not that the traders or the investors have come back to the market and things like that. They are all nothing but the excuses many people use in order to presume as if they have read the market. And actually what happens in the market is the players continue to keep that money invested of the high net worth individuals. And such money, if they want to earn, they have to continuously manipulate the market. There is no other goal. It is an open secret, but still people try to say nothing happens in the market, and it is market is so huge and 4 trillion dollars are being traded every day, so nobody will be able to manipulate. So this simultaneously they spread so that people will think that okay, market is not manipulated, so it is a question of God's wish. Based on that, the market is making move, so we will try to participate and follow technicals and fundamentals, their indirect way of learning the market or reading the market, and see that whatever they bring it to the market, they lose it to the market. And later on, they say, no, it is not ideal place for me to make money, because they are being diverted and they are being focused differently. So they fail to understand the truth behind it. That is why you come across in railway stations and bus stops and things like that, or where the public gather in large numbers, that cheats continue to prevail. And that is their way of profession. So they come every day punctually and start doing the cheating job or convincing people, misguide the people and get their attention diverted and snatch their material. So this continue to happen, even though you find everybody is aware of there are cheats in the world. But at the highest level of cheats are the manipulators. Now you come across the daylight saving system. It started in the case of US from that of 13th of March. So now you find there is the early start of the US session. From 13:30 to 20:30 GMT will be the US session. But still, European session will start by 8 GMT. So it got reduced. So from 8 to 13 GMT. The Japanese session is unaffected. And again, the gap time is varied between the US session and the Japanese session. So 30 minutes of European session is reduced. 30 minutes of European session is reduced and 1 hour of US session is gained. And that is lost in the later part, and that is given to that of the gap time. That is how it is. The new timings you follow. Then from that of 27th of March, Europe will also follow the daylight saving. Then the timings will change accordingly. I will give it in the subsequent webinars, those timings. So I take this opportunity, thank FX Street for the facilities provided to present the webinar. And also I thank all the people who have come here to listen to the webinar. I will answer the questions. Sorry, I forgot about it. So many. Okay. Okay, thanks for your good wishes. And increasingly difficult to trade properly in FX, like what you have shared. Too volatile and not much movement at certain times. Yeah, when the players find that the traders' volume is reduced before that of FOMC extra, they try to make opposite move before their intentional move. So that way, we need to understand that whenever the prime data release happens, before that the volume comes down, then they make sluggish moves in the market and make the move exactly opposite to that of what they intend to do. So what you have to do is, in case you have already taken the position, you have to hedge and book profit in the hedging. In case if you have not taken the position, wait for the quick move to happen on the downside and then take position. Once the new low is not being cut for more than 30 minutes to 2 hours, then you will find such positions will make profit. How can we trade crosses effectively? That I will probably give it in another webinar. What is your view on oil? Oil and gold, they are expected to continue to gain the level similar to that of other majors. See, all the commodities and the currencies, the players will try to accumulate and take it to that of the upward shift in trading. So what is a normal day trading range in terms of pips? So normally it should be around, if you are doing a swing trade, aim for about 30-35 pips. And if you are doing a position trade, aim for about 75 pips in a day, waiting for all the 3 sessions, that is intraday trading. And if you want to do a real position trading for the week, you can aim for about 300 pips profit. That is, quickly buy when they are making an extended stop out and quickly exit when they are making the intentional quick rise in order to offload the position. See, the players gain the levels not with a great affinity towards those currencies. They only induce the traders to short and then later on quickly rise to create the fear for the short coverage. I mean, the short sellers. So they induce the traders to take long position and then quickly drop so that the long holders liquidate. Then afterwards, they slowly gain and induce the traders to take sell position, thinking that market does not have a strength to go higher. Then it is not able to breach the resistance. Resistance 1, resistance 2, resistance 3. Then they slowly gain. Afterwards, one big upward spike, and people would have committed 3 positions, 4 positions, averaging it, the sells, and going for a short coverage when they are making a quick upward move. So this is what alternatively they do it. So for nearly about 20-25 years online trading when I are there, I've been telling about it, but still people try to lose. And how about USDN? USDN also they are expected to gain the levels when they are holding, making sideways move in the case of the numerator currencies. Why two values for initial low in the case? See, in the case of live market quote page, they are given it as 1.1206, but actually that is not today's low. Today's low is 1.1307. Is the previous day low, they are still holding it, and it is an error in the live market quote page. That is why I just put two values. Hope you are able to understand. I noticed that GBP is going upward this week. Can I safely say that unlike the long-term trend of downward spiral, GBP is started to move upward? Yes, always GBP is the currency they use it in order to change the market sentiment. So you know that it was the currency which came to 1.4080, breached 1.41, came down to create the bearish field. And then subsequently they gained the levels, and after that of BOE, they quickly gained the level. After FOMC, they gained the level. So that is how they do it. So GBP is the currency which is less volume currency when compared to Euro, and they are able to make such quick moves there. So track that. Besides, they have other techniques also. to make such moves in the case of GBP. How low do you see GBP USD next week? GBP USD might come to that of 1 point. So today they will try to take it to 1.45, 1.46 area, then come down to 1.4450 level, and then start gaining it again. Okay, no more questions. So I take this opportunity to thank FX Trade for the facilities provided to present the webinar, and thank you for your coming, and hope I will continue the webinars hereafterwards weekly, twice, Mondays and Fridays. So wish you all happy trading. See you on Monday.